If Greece goes bust, goes out, this will not be such a major disturbance as many people argued. Of course, there is some risk. I do not want to say there is no risk. That is clear. But we have to compare it with another risk. The other risk is that Greece stays in and never becomes competitive and needs to be financed through permanent transfers. And then other countries will also have to be financed permanently. And then that means we have an avalanche of public debt in the Eurozone.
Probably the rally was not necessarily driven by fundamentals in the first place, so it doesn't surprise me that it's pulled back. I mean, clearly you talked about with Sam the incredible rally that we saw late last year. If you look at growth and profit revisions in China, they've been trending down for pretty much since 2009, and more recently earnings revisions have been rolling over again. At the same time, you've also got relatively tight lending rates in China. So I guess part of the hope in the rally late last year was that liquidity conditions would ease, but in reality, real lending rates are actually pretty tight. I think the Hong Kong listed market may start to look interesting fairly soon. It's clearly still very cheap from a valuation perspective, I think about 7 times earnings. So if it pulls back a little bit further, it's probably a reasonable entry point, given from a technical point of view, it did actually break the relative downtrend that we've seen since 2009.